A late-breaking story right before we went on the air today. Total, Europe's third largest oil producer, has offered to buy as much as 60% of the solar company SunPower, based right here in Silicon Valley. For more on that story, in addition to all the reporters and editors here in this room, we've got Bloomberg New Energy Finance's analyst, Nat Bullard. You flagged me right when I walked in the room right after the deal was announced. This is a huge deal.
This is actually the biggest M&A in the midstream part of solar and the downstream part of solar we've ever seen. There was similar deals in Europe a few years ago. Nothing like that since 2008.
And pretty interesting that an energy company, an oil company, is buying one of the biggest makers of solar panels.
Well, the main thing about that when you say energy is what matters is the cost of capital and the scale. SunPower is a $1.25 billion company. Total is a $119 billion company. And in terms of cash flow, they did $186 billion in revenue last year compared to $2 billion.
Well, and we've got a chart. I want to pull up the chart really quick of the EBITDA margins of these two companies. And EBITDA is a band word on Bloomberg TV. But what I can say is it's essentially their operating profit before all kinds of other garbage like taxes and depreciation. Right. And it shows they're very different companies.
They are.
That the profitability at Total is much better than SunPower, which you wouldn't think. You'd think it'd be just the opposite.
You would think that SunPower, being a technology company, would have technology margins, but it's also being squeezed in a lot of ways by the commodity business aspects of the rest of the solar value chain.
And these guys also have done a lot of partnerships. Just the other full screen we put together is just showing all the different partnerships these guys. Joint venture with AU Optronics, joint venture with First Philippine Electric, contract manufacturing agreements with Flextronics and with J-Bill Circuit. These guys have done a lot of partnerships, but this is on a different scale.
This is very much on a different scale because you're now talking about projects. All of those are upstream and midstream type stuff. Projects imply somebody who needs to own an asset for 2 decades in the case of a long power contract. SunPower, not really equipped to do that by its nature. Total, obviously equipped to do that.
In a glut of solar panels coming on, does this change the competitive position for SunPower panels?
Certainly. I mean, if you think about it in terms of how those going to feed the market, these are now going to feed Total mainly. And in that sense, they're going to carry to Total's cost of capital, not SunPower's. If Total can put together a project and sell the power given its own cost structures, it'll do fine.
All right. Nat Bullard, analyst with New Energy Finance here at Bloomberg. Glad to have you here. Emily?